All right, let's let's visit our first complete week of currency trading. I hope that you experimented and played around. And I know it's not nice to say, I hope you lost. I hope you made a lot of mistakes because this is how we learn. Now what we want to do after the first week is we're going to say, well, how can we do this better? How can we bring more structure in to correct these mistakes? So I'm going to give you a trading strategy that I find works quite well. I wouldn't so much call it a trading strategy as a trading framework, a way to think about taking positions, a way to think about building in and out of your positions, and a way to think about whether you want to keep your position or get rid of your position. And you can't just take a position, cross your fingers, and hope. Once you take a position like any asset, you have to monitor the markets because information can change at any time. You also have to have some kind of strategy of how you build into a position and how you get out of a position. You have to think about all these things. If you're going to make money, you must have discipline, and you must have rules, and you must have a strategy and a framework that you work within. You can't just think of this like a casino and go off, have a few drinks, come back, and go long the British pound. It doesn't work that way. So I'm going to show you a framework that I use that involves a fundamental core and a technical periphery on positions. And the fundamental core is what I fundamentally believe. And this will be guided primarily by interest rate differentials among currencies, which is the Taylor rule. So I'll look at two different currencies, and I'll look at what the Taylor rule would say as to the inflation gap and the output gap, and what the likely direction of the central bank is. And if I see a divergence in central bank policy, I've got a fundamental reason to be in there. So let's take the Canadian. I'm long the US.CAD, long the US Canadian. And remember, when we're long a pair, our descriptor, long or short, applies to the first of the pair. So I'm long the US, which means I am short the Canadian dollar. And let's say, for example's sake, for the fundamental core, I wanted to take a $100,000 position on the fundamental core. So there I am. Fundamentally, I'm long because I believe it. I can sleep at night with that 100,000 because I have a conviction on that. I think the market may be wrong from day to day, but I think that over a period of time, the market will come back and realize that that's fundamentally what's going to happen. Then there's the technical periphery. Here's what this looks like. Let's draw out a chart. And let's say on a chart we've observed a channel. Let's say there's a line of resistance and a line of support, and the currency seems to be doing this. Trading in like that, and let's say it stops right there. Let's say that that's where we are. So we got a double top here, we got a double bottom, we're in the middle of the channel. So from a purely technical perspective, we're neither bullish nor bearish on this thing right now because it's in the middle of a trading channel. The closer it gets to support, the more we'd be willing to take a position. The closer it gets to resistance, the less willing we would be to take a position. So here's how I would play this. The technical periphery is how I add and subtract from my position without touching my core. So as we drift closer to this line of support, I'm willing to add to my position with a stop, called a technical stop. I'm not going to say 20 pips or 40 pips. I'm just going to find where this line of support is. I'm going to go down a little bit, and I'm going to say, well, you know, if we reach down to this level, and mostly it's experience, you eyeball it, you say, well, if we get down here, if it was like 40 pips or 50 pips down, something big enough, then I'm out. So I would have a quick stop on this, but not on my fundamental core. Why? Because I fundamentally believe that. I fundamentally believe that this will play out, but in the short term, I don't want to mess around with that. So that's just a technical position on top of a fundamental position. I can get stopped out on this. I'm still in the game. If I find support and up it goes, I would then probably add to my position. I'd have 60,000 now, and I'd move my stop up probably to the line of support. As it continues to move up, I may add another 20. As it crosses the center line, I would no longer be adding to my position, but as it starts to move towards this line of resistance, I would start subtracting from my position until at support, I'm right out of my technical periphery. If we break out, I've still got my core. If it falls back, I've gotten out of my technical periphery, and I don't mind writing it down because I believe in this. It just takes time. I believe in this. But as it starts going down, once it passes the center line again, I will start to add. If I find that we get support here again, I'll add again, and I'll do it over again. Again, all with stops. So the technical periphery, I would add with stops. I would add at support. So let's write that down. We would add at support, and I would lighten up. LIGHT. I'd lighten up at resistance. But I wouldn't go short. I would not go short because my fundamental core is long. So I would not get to resistance and say, great, now let me go short and write it back down. I would not do that. I would simply drive, I would trade the technicals in the same direction as the fundamental core, but I would trade technically. So here's my resistance, here's my support. If we break out above this, now notice I've gotten no technical position because I've gotten rid of it over here before we got there. If we break out, my fundamental core is still playing for me. It comes back down and tests the resistance line, which is now support. I would add with a stop. And of course, if it keeps on going, that's great. Now, I don't know where the next line is, but I would take this distance and I would add it to this breakout, and I would assume that that would be my next technical line of resistance. If I add to my position at the bottom and it breaks down, I have a stop, but I would not take out my fundamental core. I would leave that in place. I'm going to show you why it makes more sense when we get to the futures section of what I want to do. I'll show you why it makes more sense to use a futures contract for your fundamental core as opposed to a spot market position for the fundamental core. So let's have a look at the Canadian dollar, the chart of the Canadian, and let's see what happened during the week. Then we'll come back and we'll fill in these four little spots right here. Notice it says support for my fundamental core. I have the core here. I'm going to look for things that support my position that happened over the last week. What supports me continuing to hold this position? Then I'm going to look for things that challenge my belief in this. What is a challenge to this fundamental core? Should I change my mind? Are the challenges greater than the supports, or do I find that there's more support than the challenge? And you got to be honest. You can't just go looking for stuff that confirms your opinion. That's called confirmation bias. It's easy to find evidence that says you're right, that says you're smart, that says you're the best looking person in the world. That's easy to find. You want to find stuff that says you're not so bright, that you're not so smart, maybe you're not so good looking, right? Oh, that can't be true though. And then for the technical periphery, I'm going to find any technical indicators that support my position and any technical indicators that threaten my position. Right. So I have up a 1 year chart, or at least a daily candles on the Canadian. It's 1 year. It goes from last December all the way to this January. So we have December, January, February, March along the bottom here. And for a while, from the beginning of May of 2016, we could see that we had an upward channel, an upward line of support for the Canadian dollar, and it sort of had an upward channel as well. But it broke that line over here. So what we can do with this line is we can ignore it as a technical line. That's gone. What we have now is a sideways channel where we have a bunch of support here. We have some resistance, clear resistance here. Looks like some support here, resistance here, quite a bit of support, but it's really bouncing off here, and it's not getting past the halfway point before it came back to test. So let's zoom into this corner here because this is what we're interested in. Let's go with hourly candles. There's our line down here, so we can extend that out, and we could probably bring it up a little bit. Notice that it comes in at 1.3, 130.5. Which is what we did test that week at the lower base, and we get some support over that. This is Friday. This is how we ended Friday. The Canadian dollar weakened on Friday. It primarily started weakening in the morning. This is at night, and then in the morning we can see that there was a weakening trend. Not much. Typically Friday afternoons, there's really not a lot. You can call that drift. But what have we learned from a technical perspective? We found that the dollar found the U.S. dollar found clear support. It did not breach the support line at all. It found clear support. So that adds to my technical belief. That adds support for technical positions of taking positions down here and riding them up, adding to my peripheral core. My core. What happened here? What was the big thing that happened on Friday if you were paying attention? There's so much focus on jobs in the U.S. versus Mexico and a potential trade war looming in Mexico that something snuck by that sort of caught everyone off guard. Is you have the car companies acquiescing to the U.S. government saying, okay, we'll invest in the U.S. We won't move our production from the U.S. to Mexico. We'll invest in the U.S. Instead, we'll move our Canadian production to Mexico. So on Friday, GM announced that it was moving 600. It was shutting down 625 jobs in a small southern Ontario city, and those jobs are going to Mexico. So the realization is starting to set in that, wait a minute here, unless Canada starts fighting back, car companies will just give in to the bully in the U.S., give in to Trump and say, fine, here we go. Let's just move our Canadian production to Mexico instead. Now, the announcement wasn't new. It was expected that there'd be some production moving to Mexico anyways, but the timing brought up in everybody's mind front and center that, hey, wait a minute, this is a real possibility now. So I think that sentiment will start to get a hold in there. Okay, let's have a look at our fundamental picture for Canada. And I've got nothing but Canadian economic data up here. And if you're using trading economics for your economic calendar, you just have to go up here, click on country, and you can click on whatever country you want. And then click here. If you don't find the country, you can go to more countries, but Canada's right here. So this is the last month. I can have a brief look at the whole last month, but I really just want to look at what the most current things are. So this is from January 20th onwards. Our inflation, 1.6%. The consensus was for 1.7, and it sort of came in light year over year, 1.7, 1.5. You look at month over month, you don't want to see negative numbers. Negative numbers really reinforce no reason for a central bank to raise rates. So if we have a look at our inflation rate, look at that. That's got kind of a strong downward trend to that inflation rate over time. I can't move the mouse at the same time, but you can see what I mean. You've got a really strong downward trend on the inflation rate. You can really see it there if we look at the core inflation. This is core inflation. And you can see that it's down from 2% down to 1.6%, and month over month appears to be dropping. So we got a negative inflation gap. That puts downward pressure on interest rates, not upward pressure. So I'm not too concerned there. That's not a threat to my position. In fact, that's support for my position. Retail sales, the consensus was for a 0.5% increase. We got a 0.2%, kind of light year over year. The previous read was 4%, only 3% now. If we look at our wholesale sales, consensus was 0.5%. We came in at 0.2%. And Canadian budget balance, the previous was negative 1.5. It's negative 3.3. So the more a government spends, the more it has to finance, the bigger its budget deficit, the bigger its debt, which is a negative for the dollar. So from a fundamental perspective from last week, I don't feel threatened. However, I don't want to stop there. I want to make sure that I have nothing threatening me for the next week. So I'm going to come down here and I'm going to click on next week and I'm going to see what we have. We have some export information that's coming out. The previous was a positive trade balance of $45 billion. Let's have a look at what our trade looks like. That's a nice upward sloping curve from mid-July onwards. Exports look strong. Another strong reading could affect the position. The position could move against me. We have PMI, Purchasing Manager data, and the previous was 60.8. The forecast is 55.55, so for a drop in PMI activity. But if we look at it from April onwards, we really look like we got a strong building trend in PMI, so I don't know so much that I'd want to bet against the PMI. What else have we got? Housing prices, housing starts. That's a Canadian thing on its own, but you want to see something interesting on our housing price index. Look at this. Straight up the side of the chart, right? This is year over year. This is the new housing price index year over year. Just growing right off the chart, right? Unbelievable. Then we have the jobs report. The last jobs report was extremely strong, and the currency strengthened on the last jobs report. So I don't want to bet against that, especially with rising oil prices. That really, especially when you have big cuts that happen in the oil patch in Alberta, any increase in price brings jobs back very quickly. So that could be a bit of a trouble patch. So I don't want to get too involved in that. But if we look at full-time employment change, you can see that last big blue bar. That was last month. But it doesn't seem to have persistence. In other words, there's not a trend there. If you look at that and you take all of the negative bars and all of the positive bars and net them out, it looks like we're flat, right? If we look at our part-time unemployment position, they don't net out. Look at those blue bars and look at the negative bars underneath. It looks like we add part-time jobs, but we're flat on full-time jobs. However, the currency will respond to the read, to the headline number, and over time, it will look at the bigger picture. So you want to be aware of that, right? So the previous consensus you can see for unemployment was an addition of 53.7. The forecast is for 23.3. So that's a big threat to my position for next Friday. So I've got three things I got to get through. I got to get through exports, I got to get through the PMI, and I got to get through the jobs report. How am I going to do that? Well, here's what I'm going to do. I'm probably not going to want to take a technical periphery until after I see the numbers, until after I see support on the currency if they're good. If they're bad, then my fundamental core will work out for me and I can add to the technical periphery. So the big ones that I'd be concerned about, Tuesday's a big day. 8:30 you got exports, 10 o'clock you got PMI. If they both come in strong, Tuesday's a write-off. For the fundamental core. I'm going to lose on that position, so I just want to stay away from it technically as well. Unless I see that it's finding support, then I might want to grab it at support. But that's a big threat day for me. Wednesday, Thursday, those days are okay. We don't know what kind of information or what kind of sentiment or news is going to happen during the week. We really don't know. So it's not like I can say I can just relax and coast for those days. Stuff may happen all over the place. But Friday morning, that's a big problem. So what do I want to do going into Friday morning is I want to have nothing but my fundamental core position, and I want no technical periphery position at all. So I'm going to be looking at getting out of any extra position I have on my currency going into this jobs report. I want confirmation from the jobs report that I'm okay to get back into the market. I don't want to gamble in front of it technically, because these reports they don't respect technical patterns. These reports are fundamental reports. They'll push the currency in whatever direction they want to go in. They will not respect the technicals. Only once we settle down and we get an hour, 2 hours away from the report, can you suddenly start stepping back in and saying, okay, technicals, come on back into the room. But the half hour before and the half hour after that report, there's no point in playing technically on this one. So let's see what our full analysis looks like now. All right, so here we are. My long position on US CAD, fundamental core 100,000. My technical periphery is variable. I do have a position technically right now, which is quite large. I am looking to lighten up on that. What is supporting my core belief here? Well, GM jobs going to Mexico. Now, again, that was already announced, but that's going to affect sentiment. And sentiment is something you got to pay attention to. That's going to affect people's mindset. It's going to be front and center now, like, oh, yeah, you know what? Instead of jobs leaving the U.S. to Mexico, they could stay right in the U.S. and companies will just take the Canadian jobs and send them to Mexico because, well, we're not going to say anything about it. We don't have the kind of government that's going to do what the U.S. government is doing. We don't have that kind of government. Retail sales, they're positive, but they're light. Inflation is light and getting lighter. No reason to raise rates at that point. And our budget balance kind of supports the fundamental core because we have a negative fiscal budget. What is the challenge to my fundamental core? Well, there's still sentiment about Keystone. Keystone XL has got approved. and there's still sentiment about suddenly the oil will start flowing out of Alberta down to the Gulf Coast and everyone will get their job back in the next week. It's going to take a while for people to realize that, you know what, this is 4 to 7 years away before this really happens. And then they have to really think that, you know what, in 4 to 7 years, is the demand for oil going to be what it is today? Or is solar and wind going to displace a lot for electrical generation? And is electrical vehicles really going to make that big leap forward, which I think it will, by that point in time? In other words, are we building a pipeline that will carry nothing? That takes some time for people to think about and digest. That requires analysts to write reports that support what I just said, and those reports are read by investors who then start to digest that information and go, you know what, this guy's pretty smart. Our trade balance on Tuesday is a threat because we had positive trade balances. Will it be positive again? PMI on Tuesday, I got to watch that number. That's a threat. And the big threat is jobs on Friday. Now that's a threat to my fundamental core, but more so for the technical periphery. This makes me not want to have any position out here. For challenge on my technical side, there are no challenges. Periphery, I got a triple bottom. That is very strong support. So technically, my position is very strongly supported. Fundamentally, my position is very strongly supported. I don't plan on changing this. I plan on adding out here. After Tuesday, after I get the trade balance and PMI, if I see that it supports my position, I will add, but I will lighten up for Friday. If Friday comes in light, I will add huge on this side. That's how I would play that. Let's have a look at Mexico really quick. Okay, first thing we'll do is we'll look at Mexico's data. So follow me along here. You just go to countries. Mexico is not listed here. If you click on more countries, you'll find Mexico down here. Click on Mexico. Here we are from January 30th. This is forward looking. I want to go back the previous month, and then I just want to focus on the last week from Friday, Wednesday. Let's go from the 20th. Mexican unemployment rate. Let's have a look at that. 3.4%. 3.4. That's better than the U.S. Have a look at what's going on here. Look at over the last 4 months. Their unemployment rate has been dropping dramatically. Pretty much in line with how their currency has been depreciating. Why? Because suddenly it's cheap to buy stuff out of Mexico. Look at the effect it's having on that unemployment rate. Economic activity, consensus was 0.5, 0.2, so it's kind of light there. Look at their inflation though, 4.78. Consensus 4.55, 4.78. Who's got 4.5% inflation in developed countries? No one. That's an inflation rate Japan would love to have, or at least love to be threatened with, right? What else have we got? We got economic activity year over year. The consensus was 2.5, 3.7. So you can see that there's not really a trend, but it's consistently positive. There are no negative bars there. Look at retail sales. Consensus was for a 7.8% increase, 11.2%. Canada was year over year, 3%. This is 11.2%. So if we have a look at that chart, look how strong that is. Look at that. That's beautiful, right? And look at their trade balance. 28 million. It's a positive trade balance. If we look at the trend, strongly negative, but it turned positive last month. That's a bit of a negative for Mexico, mostly because of the oil price. But overall, we would say, here's what I see. I see a negative inflation gap. I see every reason for the central bank to want to take care of this. And you take care of that by raising rates. How do you also support a currency that's extremely undervalued? You raise rates. Let's have a look at that Mexican peso. So here's a daily chart of the Mexican peso, and we can see this is 17, 18. All this is in the range of 17.5 to 18.5. Here's Trump winning the election, and there's the peso ever since. But look at that. We've got some recovery at the very end. So let's go to a shorter time period and have a look at that. So here we go. This was over here. This was the cancellation of the meeting between the Mexican president. Do they have a president or a prime minister? The Mexican leader and the U.S. leader. This is the cancellation of that meeting. This is the phone call they had. This is the phone call. Look at the strengthening on this. So we have all the data and all the information is out about how the U.S. wants to build a wall, wants to shut down immigration, wants to make Mexico pay for it. And in the face of that on Friday, the Mexican peso still gained. It still gained, and it broke down below 21. It's now 20.89. So it's below that 21. And over this period of time, all the way through here, look at this. This is well over 21. It threatened to break down under 21, but lost it. It looked like it was over here, but now it's continuing on. So if it can do this, technically that's a very bullish pattern on Friday. This is a very bullish signal that in the face of all that, because it's known information, that the peso will still strengthen against the U.S. dollar. Adding to that is the idea that, hey, you know what? Mexico's not going to be so bad. It just got a whole bunch of jobs from GM out of Canada. So Mexico is still going to do okay. Its inflation is really high and its currency is really undervalued. Let's have a look at my chart on that one. So here we go. Fundamental core again, 100,000. My technical will be variable. The problem with the technicals here is if you look at the chart, there's it's been doing this for so long that there's really there are no lines of support or resistance, so it's hard to play technically. It's hard to know where your next technical level is. However, what supports my position of being long the Mexican peso is there's a bullish chart on Friday. I'm short the U.S. Mexican, which means I'm short the U.S., which means I must be long the peso, right? What supports the fundamental core? Strong economic data, positive inflation gap, and very oversold currency. What challenges it? Trump, trade, the wall. I don't know how sentiment is going to play out on that. If Friday's any indicator, sentiment seemed to be like, yeah, that's there, but you know what? The peso's way oversold to begin with anyways. So if the peso can rise in the face of this, that tells me that, yeah, it's probably well agreed upon that the peso is overvalued. And is probably going to have some sort of central bank action at some point, whether it be some kind of currency intervention to support that currency to get the inflation rate down, because a low currency will import inflation, or raising interest rates to get the currency back up and to slow down some domestic activity. I don't know, but the possibility is there. So am I threatened on this? No. I think that everything so far supports. Now, I use the word I think because that's it. I think it does. I don't know that it does, but here's the thing. I'm still going to remain short the peso. Technically, it's harder to play because I don't have clear support or resistance lines. I don't have a lot of clear indicators on that, but I'll still push it when I feel good about it, and I'll lighten up when I feel bad about it, but I'll keep the core. And you know my position on the Canadian. For whatever currency you're looking at, you really should be going through these processes, and you should be paying attention as to what's happening and ask yourself, is that a threat to my position or does it support my position? And if you divide your position between what you fundamentally believe in and this, you could call this tactical rebalancing. If you think about portfolio rebalancing, you have tactical rebalancing where sometimes you'll leave your asset mix intentionally to take advantage of an opportunity. That's your technical periphery. That's your tactical rebalancing and your fundamental core. So I hope that puts a little bit more structure in. So far you've got the Taylor rule to work with. You've got charts and some technical indicators that you can look at on your particular currency. You know where to find some fundamental economic data for the past and for the future coming up on your currency. Now you can start to separate a fundamental position from a technical position and start playing the technicals and the fundamentals at the same time. Next week we'll add a little bit more structure to your trading. Okay, before we go, here's my screenshot from FXCM. I started with you last Sunday, taking positions on here in line with the two strategies that I've been playing. And as of for a 1 week return, I've got 2,149 on the original 50,000. So let me zoom into that, and there you go.